Noise, so much noise. Okay, so cost classification for predicting cost behavior. So when we talk about predictions, cost can be classified into variable cost, fixed cost, and mixed cost. So let's talk about the variable cost. So variable cost is the cost which increase or decrease with the level of output or quantity. So when quantity increase or decrease, the cost also increase or decrease. We call that variable cost. So this concept is similar to the economics concept where we talk about, in earlier semester when we discussed about variable cost and fixed cost, the concept is same. So example is, for example, your total texting bill is based on how many texts you send. If you send one text, the cost is going to be, for example, 0.5. If you send 3, cost going to be 1.5, so just like that. So if you draw a graph, so graph going to be the quantity increase, price also increase, or cost also increase. So it is upward sloping straight line. So the behavior of the cost is that, so variable cost in total, when quantity increase, the total variable cost increases, but in per unit cases, it remains the same. So the behavior of per unit variable cost is that it remains the same. For example, every text costs you $0.5, right? $0.5, one text. If you send 10 texts, $5. If you send 20 texts, $10, right? So in total, the cost changes from $5 to $10. Yes, it changes, and quantity also changes. Yes, but per unit, variable cost remains the same, right? So the behavior of variable cost is that in total, it behaves on a variable basis. Like if quantity increase, the total variable cost increase. If quantity decrease, the total variable cost also decrease. But in per unit basis, the variable cost is constant or stays the same. So, okay, we'll talk about later. So fixed cost is that cost which do not vary with the level of output. Whether you increase the output, whether you decrease the output, it stays the same. So the behavior of fixed cost is that in total, whether you increase or decrease the quantity, the total fixed cost remains the same. So for example, your monthly contract fee for your cell phone is fixed for the number of monthly minutes in your contract. The monthly contract fee doesn't change based on your number of calls you make. But when we see the per unit fixed cost, the behavior changes. So as the level of output increases, the fixed costs start decreasing, right? Here we go. So the behavior of fixed cost is that in total, it remains fixed, but in per unit, it changes, and changes to what level? It decreases with the level of output increase, but it never touches zero. So there are two types of fixed cost. One is called committed cost, and one is discretionary fixed cost. So that is new for most of you guys. So committed fixed cost based on long term, for example, depreciation on buildings, equipment, and real estate taxes as well. So these are committed costs, and the periods are long term. You bought a building, right? A building can stand with, like, your analysis says that building can stand for 20 years. So 20 years you decide to depreciate the building. 20 years is a long term, right? So, but you cannot significantly reduce that. You can renovate the building, you can increase its lifespan, but you cannot avoid depreciation, right? You cannot avoid taxes. You can minimize that one, but you cannot avoid that, right? So this is called the committed fixed cost. Discretionary fixed cost. Look at the name, discretionary. It means it is on your decision, on your discretion. So it can be changed. It can be long term, it can be short term. And manager can decide that. For example, research and development, advertising, whether this product is worth to advertise or not. For example, roll rice. Do you see roll rice advertisement? No, right? Because that's a managerial decision. Because that is not for the masses. That is for a niche marketing. That is for those who can afford that one. So the wealthy businessmen or wealthy people, right? Similarly, Boeing company advertisement. You don't see a lot of Boeing company advertisement. Why? Because they know that their brand is like become the highest quality, and plus no one can compete them. So research and development can be also a discretionary cost. Either you can take it to long term, you can also can cancel it at any time, right? For example, you can say that okay, this time we are going to have a cut, 50% cut on research and development, or we are not going to have any research and development. We can outsource from China, right? We are not developing our own research facility, right? So there are two types of fixed costs, committed and discretionary. Which one you can avoid or you can delete or alter? Discretionary type, not the committed one. The committed one you can reduce, but you cannot avoid. The discretionary one you can eliminate, but committed you cannot do that. Any question? Okay, now the linear assumption and the relevant range. The concept is that, so if you see the total cost on a level of activity, the behavior of the total cost is that it is increasing. See? So relevant range is that it is that range in which a cost presents itself on a linear basis. When we have a linear basis, we can find out the linear equation. What is the linear equation? Y is equal to ax plus, for example, b, or a plus bx. That would be very nice. So linear linear equation is y is equal to a, which is the constant one, and this is the slope, and this is the variable, right? So even if you are looking at your cost and you can also predict the future, because this classification is based on prediction, right? Based on prediction, we have three classification. And three classification. Number one is variable, fixed, and mixed cost. So even if your cost behavior is unpredictable, you find out the relevant range. And in relevant range, you find out that range in which your curve shows or displays a linear or straight line approximation. You use that one and put the formula, you find out the variable and fixed cost. So here we go. In that case, this is total cost is equal to fixed, because fixed doesn't apply on any level of activity. So constant becomes the fixed cost, and this is your per unit variable cost, because per unit variable cost, it doesn't change. So we can take it as a slope, and that is the number of outputs, x or variable, right? So in that case, use your basic mathematics, class knowledge. You can replace that one into linear function, and you can find out Whether you want to find out variable cost, you can rearrange the equation. You can find out fixed cost as well. You can also find out total cost as well, right? So fixed cost and the relevant range, for example, how you can apply that relevant range and all those stuff. So for example, assume office space is available at a rental rate of 30,000 per year in increments of 1,000 square feet. So it means if you want to rent 100 square, you cannot rent. At least you can rent 1,000 square feet, right? So fixed cost would increase in a step fashion at a rate of 30,000 for each additional 1,000 square feet. If you want to rent 1,200 square feet, you cannot rent. Why? Because every addition is going to be for 1,000 square feet. So if we just apply these kind of stuff, so we find out the relevant ranges. Here we go, right? Simple stuff. So cost classification for predicting cost behavior, we just talk about that. So we put it in a very nice matrix here. So fixed cost behavior in total is that it remains fixed. It doesn't affect any changes in the, it doesn't affected by the changes in activity, whereas the variable cost in total, it behave in a variable fashion where the level of activity increase or decrease, the total variable cost also increase or decrease. But when we see the behavior in per unit, the per unit variable cost is that it behaves in a constant manner, right? So per unit variable cost is a constant number, whereas the fixed